While AMD is poised to continue its explosive growth that we've been seeing over the last year, it's finding that the much more large and established competition, namely Intel in CPUs and data centers, I guess, and Nvidia in GPUs, are standing firm with much larger cash reserves, and in both cases drastically larger revenue and profit pools as well. In my initial broad stroke video looking into AMD's stock, we looked briefly at the opportunities they have, the valuation of the stock currently, and where we think the company could be going, where the stock could be going, going forward in the coming quarters and years. But in this video, I wanted to dig in a little bit more to how they look in comparison to these two competitors in particular, both in terms of a little bit of their product offerings, as well as the stock, the valuations, as investments for us to choose from going forward. First, let's start out taking a look at Intel. One of the major reasons we've seen AMD able to pull in their jaw-dropping revenue growth of 93% year over year, leading to a 221% gain in EPS, is because their primary rival, Intel, appears to be taking it a little bit too easy. While AMD, with foundry partner Taiwan Semiconductor's assistance, has managed to reach 7 nanometer nodes for their semiconductors, Intel seems to be just fumbling in attempts to break through the 10 nanometer barrier. When you're evaluating chips, the nanometer descriptor in the production process, simply put, gives us an idea of how advanced their technology is. The smaller the elements, the more compact the device, and therefore the less energy it uses, all while providing superior output like processing speeds and stuff like that. There doesn't seem to be any downside besides costs for the end user, and in many cases, smaller ones can often end up being cheaper too. For reference, Apple's new M1 chips, we're not talking about Apple in this video, but for reference, they use a 5 nanometer process. So Intel's falling behind in this aspect doesn't only bear fruit in the home computing segment, but it ends up hitting data centers and all other avenues of their business and their sales too. Intel lost 47% of its revenues in the last quarter in the enterprise data center segment, while AMD's more than doubled its revenues in the same segment at the same time. All that being said, Intel is still massive compared to AMD as far as revenues go. In 2020, AMD's revenues worked out to be about 9.7 billion, with 25% of that reaching the bottom line for a net income of 2.49 billion. But that really looks like small potatoes compared to Intel, whose revenues worked out to be around 77 billion, with nearly 27% of that reaching the bottom line for a net income of $20.9 billion. Looking at it that way gives you a sense of just how small AMD still is. But that begs the question, if Intel's pulling in nearly 10 times the net income, why is their market cap only double AMD's? Maybe they're a better investment deal. Maybe they're a better opportunity than AMD. Let's take a look at a few more ingredients that'll help us understand the situation, and we can start with Intel's own first quarter results. This slide gives us a glimpse into what's going on. The center chart in green here shows the operating income, which was down 2% year over year, with a similarly shrinking operating margin. That ain't good, guys. The data center group is even more alarming, where we see revenues on the left there down 20% year over year, with operating income down 64%. The operating margin thus suffered massively, getting absolutely kidney punched from 50% down to 23%. They mentioned COVID-related issues on the bottom there, as well as the 10 nanometer ramp to blame, but nobody else is talking about these issues. The other business segment shows a similar story, like Mobileye operating income's down 13% year over year, with PSG operating incomes down 9% year over year. This slide shows us the expected results for the entirety of 2021, where things are looking similarly pear-shaped for Intel, as they expect revenues, gross margins, and EPS all to drop for this year on the whole. So even though a lot of the ratios and figures end up looking pretty pleasing for Intel, especially compared to AMD at the moment, including PE ratio, PS ratio, EV to EBITDA, basically the missing ingredient, the missing sparkle that's really keeping Intel from being a good investment, from being a must-buy stock in comparison to AMD, is the growth figures, the future prospects. growth ends up being one of those really huge facets that are hard for us as individual investors to really grasp because we don't always know about the inner workings of the companies, especially when it comes to R&D. Sure, Intel is way bigger and has their hands in way more market segments, but if we're seeing sideways or even negative growth, like what hope do we have for the future? At what point would you decide, okay, I'm going to pull my money out? Right now, it might be like a good deal, but when do you decide, okay, I'm going to stop if things just keep going downhill? You know what I mean? At what point should we sell all of our holdings and move on if the foundational appeal of the stock, which is growth and product dominance, doesn't appear to exist and may not ever again? And that's why I like AMD over Intel at the moment as an investment. If you want to take a deeper look at AMD and their financials and DCF, kind of what analysts are expecting the stock price to go up to, please click up here to check out this video. I'll link it down in the description as well. All that being said, I don't think Intel is by any means like down and out. It's not like flee Intel, they're garbage now or something like that. And I think they will have something at some point down the line that comes out that kind of puts them back on the map again. I'm excited to see how competition will continue to provide better bang for the buck products for us, the end users, in the future. Please also let me know your thoughts on Intel as an investment, as this is by no means an exhaustive look into their company or their stock. Secondly, let's take a look at Nvidia. I should also mention that I'm a fan of Nvidia, its brand, its products, and I've owned the stock, though I don't currently own it. And I also wanted to mention that an earnings call is only a few days away. So I'd be interested to see how things like the worldwide chip shortage, which has caused massive supply shortages for many companies, including Nvidia, have affected the numbers. If you're interested, let me know if you'd like me to make a video covering those updated earnings in the comments section too. If you're unfamiliar with this market, generally speaking, Nvidia has been known to be the market leader for years especially when it comes to GPUs, graphics processing units. More and more in recent years, that the dominance in the GPU segment has started to spill over into other areas such as data centers, automated driving, cryptocurrency mining, and many other sectors of the market. All of this while maintaining a massive backlog of demand for their jaw-dropping high-performance graphics cards too. It's hard not to get too techie for me looking into the specifics of GPU performance and stuff like that, but AMD's been making claims that people aren't used to hearing from AMD when it comes to the GPU segment. When Nvidia launched their newest series of GPUs that not only boosted performance over any previous generation GPUs by massive margins by any companies, it was assumed that they would hold market dominance for years to come. But AMD quickly answered back, claiming similar performance for a lower price point. An example of this can be seen when comparing NVIDIA's RTX 3080 versus AMD's RX 6800 XT, which is cheaper and more readily available too. NVIDIA has a much larger market cap than either Intel or AMD at 373 billion. Remember, AMD's is about 93 billion, while Intel's is about 226 billion at the moment. AMD's revenues can be broken down like this, with nearly 2/3 of revenues coming in the computing and graphics segment, and the other third in the enterprise, embedded, and semi-custom segment. NVIDIA, on the other hand, garners roughly half of their revenues from gaming and nearly the other half from data centers, with the rest small percentage split between auto, OEM, IP, and ProViz. So it's clear that NVIDIA dominates the gaming industry as far as, revenues go. I'd be fascinated to learn why both PS5 and Xbox Series X ended up with AMD parts rather than NVIDIA parts because of this. But I wouldn't be surprised if AMD was able to provide a more affordable semi-custom solution for both of them. Let me know down in the comments section if you know more about that. Unlike Intel, NVIDIA showed revenues up 61% year over year to $5 billion for their gaming and data center segment in their most recently completed quarter. Breaking that down further, gaming was up 67%, while data center was almost 100%, like it was 97%. So it's clear that AMD isn't the only one taking market share from Intel's data centers. While we were impressed with AMD's gross margins in the mid-40s, continuing over the quarters, NVIDIA seems to be holding steady at a 65% gross margin over the years. It's like not a new trick for them to be super profitable. NVIDIA is also well known for having massive cash stacks and conservative leadership under Jensen Huang. They do have almost 11 billion in cash and cash equivalents, with assets outnumbering liabilities to almost 3-to-1. And that's really what divides the two stocks as investment choices for us. Because Nvidia has been so solid for so long, there are so many people willing to pay a premium for the growth and market dominance that they have. So while AMD's PE ratio is about 32, Nvidia's PE ratio is like 84 right now. So you're spending almost triple the amount per dollar of earnings to get an Nvidia share. The EV to EBITDA ratio tells a similar story. While AMD's is 42, Nvidia's works out to be about 63. And while I do think Nvidia will continue to dominate for many years to come, especially in GPUs, everyone already knows that. Everybody already agrees with me. Everybody's willing to pay that premium price for Nvidia because they're so good. So the stock price really doesn't work out to be a smoking bang for buck deal like we see with some other companies like AMD in this case. So in summary, I would say that Intel, while offering appealing metrics, doesn't seem to be promising that kind of big dominant growth going into the future, especially in comparison with AMD. Nvidia, on the other hand, does offer big growth and dominance and the promise of that going forward into the future, but everybody already knows that, so it's already priced in, and you're going to be paying a premium over AMD's share price. That's why I like AMD for the moment, and that's why I'm adding it to my portfolio. If you want to learn more about AMD's growth prospects, including the benefits and potential risks of their upcoming Xilinx acquisition, please check out this video up here and link down in the description. If you'd like to connect personally, a bit more personally, please join us over on our Patreon. Remember, guys, stay generous. I love you guys, and talk to you down in the comments section.